Welcome everyone to Best Interest. This is Shane back again for the Stock Pick of the Day video. This will be the last one for the week. It is Thursday, April 4th. We are going to take a look at Yum. You definitely know this company and probably don't even realize that you do, but let's jump in. This is out of the consumer discretionary sector. Let's jump into the video and take a look at them. Before we do that, if you could take a moment to help me out, hit that thumbs up button down below if you find value in the content. Don't forget to subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. It really does help out the channel. Hit that notification bell so you're notified whenever we put out any new content. Drop a comment. Let me know what you think. Once you realize that you do know this company and probably frequent this company, some of you anyway, let me know what you think about it down below in the comment section. Again, doing all that really does help out a small YouTube channel like me. It doesn't cost you a thing, and I really do appreciate it. And for those of you who are already subscribed to the channel, thank you so much. I really do appreciate it. You guys are awesome. The channel continues to grow because of people like you. Now, this is the vested interest stock screener. This is how I look at a company on a high level to see if I'm interested in investing. Just because it meets the criteria, 5 of 8 or 6 of 9, if it's a financial company, doesn't mean that I'm going to be buying. It just means that it goes into the either on my watch list or possible watch list, and I do more of a deep dive into the financials, see what I'm willing to pay if the financials make sense, and then we go from there. It's also how I look at the companies already in my portfolio to make sure they are still meeting my investment criteria, and if they don't, then I take a deeper dive into those and see if there's some that I should be trimming out of the portfolio or concerned with their performance. You can use this, just don't blindly copy it. Make sure you're setting your own screeners up and your own investing criteria based on your age, your investing goals, and your time to retirement. Now back to Yum. If you want to know more about this company, check them out at www.yum.com. That's www.yum.com. That is their homepage where I pulled this information from. And again, I'm sure you know this company. Their brands include KFC, Kentucky Fried Chicken, Pizza Hut, Taco Bell. Now, I haven't frequented this one, the Habit Burger Grill. I've never been there, but definitely these first three I know all about. Actually, I spent my 21st birthday with a buddy of mine, Nick Seeger. Shout out to Nick Seeger. At a Pizza Hut after a football game his brother was playing in way back in the day whenever I turned 21, right? One of my first beers I ever had, wink, wink, nod, nod, was at Pizza Hut. Since our spinoff from PepsiCo in 1997, Yum Brands has grown to be the world's largest restaurant company, and our diversified global system includes approximately 1,500 franchisees operating more than 55,000 restaurants in over 155 countries and territories. Our KFC, Pizza Hut, and Taco Bell brands are global leaders of the chicken, pizza, and Mexican-style food categories. I would not really agree with that they're necessarily Mexican-style, maybe the American version of Mexican-style food, but having lived in Texas and just getting back from Mexico, I can tell you that Taco Bell is not necessarily Mexico-style food, and Mexicans, Hispanics definitely would not consider it Mexican-style food either. Respectively, the Habit Burger Grill is a fast casual restaurant concept specializing in made-to-order, char-grilled burgers, sandwiches, and more. The iconic KFC, Pizza Hut, Taco Bell, and the Habit Burger Grill brands delight millions of customers daily with our craveable food and memorable experiences. Again, www.yum.com is their homepage if you're interested in knowing more about them. The reason we were taking a look at them, down 1.96% on the day. We are talking about Yum Brands Inc. They are out of the consumer discretionary sector, ticker YUM. Closed out the day at $136.28. 52-week range as low as $115.53, as high as $143.25. So even with the recent pullback, they are leaning towards their 52-week high more than their 52-week low. So we'd want more of a pullback here to see, it'd be nice to see more of a pullback. You can see that drop down here on the day. It actually looks like they tried to rebound a little bit right at the end of trading, but then right back down they went. That's odd to see a big spike up like that. Yeah. Market cap of $38.34 billion. Beta of 1.09. So they are more volatile than the overall market, just slightly. Again, you can see that volatility throughout the day. PE ratio, price to earnings ratio, $24.69 per share. Seems a little high for a company like this. I mean, these are pretty well-established, well-built-out brands. Now, if some of them are growing, perhaps that fourth one there, the burger place, maybe it's growing a little bit to justify this PE, but that's a little high. That's even a little higher than the average S&P 500 right now, so I think that's elevated. Earnings per share, EPS at $5.52 per share. Earnings date coming up next month, May 1st, 2024. So tune into that if you're interested. Forward dividend is $2.68 on the year. They are a quarterly payer. We'll see that here in a little bit, what they pay per quarter per share. Dividend yield of 1.9%. That is higher than the average S&P, but a little lower than I typically like, 2.5% or higher. So again, if it was to pull back closer to the 52-week low, that would obviously get it a little higher and over that 2% mark. So it might be a better entry point, back closer to this 115, under 120 range there. Again, that might put it up into the 2.3% dividend yield range, which would be a better buy-in my opinion. Ex-dividend date, February 20th. Looks like they paid out March 8th last month. So you could buy them now and be in line for that next dividend, but you're going to have to wait a few months for it. And a one-year target estimate of $145.65. So they see them setting a new 52-week high and slightly above where they currently sit. Now we're going to take a look at dividend yield theory. And if you were to go to Yahoo Finance, where I pulled this information from, I am not affiliated with Yahoo Finance, just one of the sources that I go to for information. Over here on the left on the page, you would see a lot of different ones you would click on: finances or financials, statistics, which is what we're going to go into. So you'd click on statistics, you'd go down to dividends and splits, you'd go down to their 5-year dividend yield average of 1.76. You compare it to its current 1.9, over here forward 1.9, same number. Since it is higher, that speaks to some slight undervaluation, and I do mean slight undervaluation. I would like more of a margin of safety in here, right? Again, I'd like this over 2%, maybe over 2.2%. Personally, that gives you more of a margin of safety on this one, but according to dividend yield theory, it is slightly undervalued currently. Payout ratio is low, 43.29%. I like 75% or better, so this is way lower than what I'm looking for. Again, low is not bad. It means they have a lot of room to increase that dividend over time, and they have a lot of available free cash flow to make acquisitions, so opening new franchises or helping people open new franchises, buying back shares, paying down debt, and free cash flow to pay dividends, which is why we look at this. Now, going down here to free cash flow, we want growing free cash flow because, again, we want growing dividends over time. And typically, if a company has growing free cash flow, they have growing dividends. So going back to 2020, they were at $1.1 billion. 2021, jump up to $1.4 billion. 2022, a little drop to 1.1. 2023 to 1.3. Overall, from 2020 to 2023, we are seeing growing free cash flow. They are also repurchasing their shares. So you can actually see not quite all of the dip from 2021 to 2022 can be accounted for in the repurchase of shares, but some of it certainly could be. And they had two very good years. 2021, 2022 were pretty good years, and they really aggressively repurchased their shares. Looks like they went down a little bit in 2023. Hopefully they're going to continue that repurchase of shares trend over time. Now, stockanalysis.com is another source that I like to go to. You pick any sources that you like. Just make sure you're picking more than one so you make sure the information you're getting is accurate and up to date. This is a back check, right? You don't want to just blindly trust one source, 2, possibly 3 if you can. Make sure the information you're getting is accurate and up to date. That's the whole reason behind it. And you pick any sources that you like. These are just 2 that I like. 15 stock analysts have taken a look at this. They call it a consensus buy, though it is right on the edge of hold. So if you were to go to stock analysis webpage and go to forecast, which is where you'll find this chart, this would be a strong sell, a sell, hold, buy, strong buy. And it would tell you out of these 15 analysts how many call it a hold, how many call it a buy, a strong buy, or a sell. So go check that out if you're interested. But like I said, that is very close to a hold. So you might have quite a few hitting hold, maybe some calling it a sell, maybe some calling it a buy, and maybe even some calling it a strong buy. I did not look through that, but that's what this means. That's why they're color-coded like that. They have a low estimate of $115. That would be a 15.61% decrease from where it currently sits. Average estimate, pretty close to what we saw with Yahoo Finance on the previous page at $144.07. That would be a 5.72% increase from where it currently sits, and a high estimate of $166, which would be a 21.81% increase. All the while, you could collect that 1.9% dividend yield if you were to buy them now. Now, we're going to get into statistics here. That's this tab. So again, over on Yahoo Finance, you'd see a lot of these same tabs, right? Financial statistics, forecast, dividends. So you could look at that, although dividends is under the statistics tab on Yahoo Finance. But I just like the way they present the information of stockanalysis.com. And a lot of the financials and some of the data goes back a lot further than Yahoo Finance. That's another reason I like stockanalysis.com. But on this one, if you click statistics, You go down to financial efficiency, and you can take a look at return on equity and return on invested capital. I like 10% or better for these numbers. Return on equity is negative, 19.20%. But similar to what we saw whenever we looked at Starbucks, this is not uncommon for companies like this that are franchises or that are constantly opening. Starbucks is not a franchise, this one is, but companies like that are constantly opening new stores, right? So they are using some of their equity, some of the money they have available to open those new stores. That's how that works. So that's why you're often seeing a negative number for companies like this. But the return on invested capital, holy cow, 61.02%. That is smoking high. That is really nice to see. Good number. Again, I like 10% or better for both of these. And because of the type of company is, I can deal with this negative return on equity with the offset of the very, very nice return on invested capital. EPS growth, I like 5% or better. They're forecasting 9.04% over the next 5 years. Very good number. Revenue growth forecasted at 6.55%. Overall, this one, short of the price per share, again, would love this back under 120, I like the numbers. All of them so far look very, very good. And I like the brands, right? I mean, a lot of people that are, single parents or just want to pick up something quick for the kids to eat will stop it. Taco Bell, KFC, Pizza Hut, those type of companies aren't going anywhere. People use them, whether times are good or whether times are bad. People need to eat, and a lot of times it's just a convenience factor. Hey, I can grab something for the kids or myself real quick, stop in, go home, we eat dinner, we're done with it, go take a shower, get ready for tomorrow, right? So taking a look at dividends, they are a quarterly payer. Payout ratio again low, 47.94%. Dividend growth, nice high single digit dividend growth, 7.34%. 6-year dividend growth, so they haven't been growing extremely long, but they have been growing for the last 6, so that's nice to see. Buyback yield of 0.49%, so their buybacks are efficient, and shareholder yield of 2.42%. So good numbers overall. Going back to 2021, they were paying 50 cents in dividends. February 2022, they raised it up to 57 cents. February 2023 up to 60 cents and some fractions of a penny. February 2024 up to 67 cents. So again, nice consistent dividend raises, 7.34%. And what we saw with the earnings per share forecasted at 9%, they could probably continue this dividend growth to match that 9%, a little bit lower than that 9%, but at 7.34%, that EPS growth looks like it can maintain. So good numbers overall. Interesting company. Would like more of a pullback on this one. 120 or lower, maybe even 125 or lower. I'd really need to do more deep dive into the financials on this one, but interesting company, might be worth taking a look at if you're interested in something in this space. Well, that is really it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to that channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors. Hopefully you have started your own investing journey. If you have not, drop me a comment down below. Let me know why that is. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So let me know what you think of Yum Brands in the comment section down below. And if you have a company like it that you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it in the comments, and I'll try to work into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Don't forget to tune back in on Sunday. We'll have our portfolio update. You can see what I did in my portfolio this week, all the activity, any dividends paid out. Did we get any options that posted? You can see that all on Sunday morning at 7:30. So we'll see you in that one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. You should never invest any amount. Comfortable losing, always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice of a certified financial advisor.